Hello everyone, and welcome to today's episode of Microcap Mania. Today we're going to be going over Lifeway Foods. Now, we'll get rid of the boring stuff early on, so make sure that you do your own investment research when I go over these. Don't take everything for granted, and don't take everything I say at 100%. I'll be fully transparent. All of the relevant data I got from this, I did leverage Bloomberg and the most recent earnings report and 10K. So again, I've done my research on this company, but again, all investments carry risk. Make sure before adding this to your own portfolio, you do everything you need to make sure that this aligns with your positions. And even if I add this to the Microcap Mania portfolio, don't be influenced by somebody online. So make sure to do your own research. But I have a really exciting company today, and that is Lifeway Foods. Now, Lifeway Foods is actually kind of an interesting company because I actually just found out about them really through my own house. So, I've never been a huge fan of dairy products, particularly besides whole milk yogurt. Occasionally, I get a Noosa in, maybe even like an Oikos Greek yogurt or something. But recently, I was going through my fridge back at my house and I saw this very colorful bottle of Lifeway Kefir. Now, for those of you who don't know, I'll give you a little introduction to what kefir is. Kefir is actually, it's similar to a yogurt, but kefir is a fermented milk product, which is very rich in probiotics, which are healthy bacteria. And it's thinner and less calorie dense than yogurt, but again, it originated 2,000 years ago in the Caucasus Mountains, so in the area of Russia, Ukraine, over there. Kefir itself contains 60 probiotics that support gut health and digestion, and it can even be linked to helping with lactose intolerance. But again, I don't come from the largest dairy household. In fact, we have a little bit of lactose intolerance ourselves, so I was really surprised to see this, what looked like yogurt drink, in our refrigerator. And so I talked to my family about it, and my father is actually a really huge fan, and he talked to me about how it tasted really good and it made his gut feel significantly healthier, and it was quite beneficial. So this is actually how I discovered Lifeway Foods was actually even publicly traded, because when I looked up the company, obviously being a finance kid, I found it was listed on the NASDAQ, and it falls right in that area of almost a microcap, slightly over towards small cap, but the price does fluctuate a bit, so I decided to cover it in today's video, and it falls in the close enough category where if I want to add it to the portfolio, we will. So really quick, I'll break into kind of what the business is. So Lifeway Foods, it's a leading producer of kefir, which I introduced, and it's a pioneer in the probiotics category. So the company manufactures products under Lifeway, Fresh Made, and then they acquired Glen Oaks Farm brand names, as well as private labels for select customers. So two customers account for 25% of the revenues for the company. And then also, Lifeway was founded in 1986 by immigrant Michael Smolinski and his wife, who we'll get into in a little bit for some fun stuff later on. But again, the company was created by them. They moved over from Kiev and they didn't really find any kefir anywhere. And it's very big in that area, and it's a health superfood really, and so they decided to create their own, and the company resides kind of out of Illinois. So again, I'd never actually tried their products despite even my parents liking their products, and so in order to properly, what I felt, make this video, I actually picked up one of their products when I was grocery shopping. So I tried a peach kefir thing, and I had really no expectations going into it. I will say the packaging looked really appealing. I didn't go out of my way to necessarily get a Lifeway product. I knew I wanted to cover their company, and then I just randomly saw it, and the packaging was really appealing. It was peach flavored, and so the color on the packaging was like perfect peach colored, and then they also had strawberry flavored, and that was the color of a strawberry, and it was really appealing on the eyes. So I figured I'd give it a taste test, and I actually tried it last night, as mentioned, and I was pleasantly surprised. Typically, whenever something is said to be like a probiotic or a health product, they typically kind of suck. Like Kombucha, for instance. I've tried plenty of kombucha multiple times through different people's moms, my own mom, convinced that kombucha is like incredible. And it tastes terrible. Like, there's a little bit of you that like gets over it because you know how beneficial it is for you, in the same way like a lot of vegetables, you don't eat them because they taste wonderful, you taste them because they like do good things for your body. And that was kind of my experience with kombucha and kind of what I saw going into this. And obviously if you compare it to just like drinkable yogurt drinks that I've typically had in the past, I wouldn't say flavor wise it's as good, but if you compare it to anything in like the health category, which I think Lifeway really tries to compete with, specifically like the health side stuff, so even Greek yogurt, I'd say it actually tasted pretty well, and I had a rather pleasant experience trying their products. So a little bit into kind of what their portfolio offers. They have their drinkable kefir, which is 80% of their revenues. They also have European style soft cheeses, which are 10% of their revenues. Cream, which is 5% of their revenues. And then also they have their Pro Bugs, which, as you see in the image right here, that's their kefir that's targeted more towards kids. And again, all of their products carry the USDA organic label. And you can even tell from the advertising, they're really trying to brand this as healthy, superfood, and really attractive for investors to try and for consumers to actually try their products. And then also another category that they've been looking into, that they've started expanding into, is butters and sour creams, and that kind of falls under their other dairy products category. Now, going a little bit into their distribution network, currently their network spans the US, Mexico, the Caribbean, UK, Ireland, and just recently the Middle East in the UAE. So their sales to distributors represents 50% of their revenues, with products sold through direct sales brokers and, of course, the distributors. And then the kefir segment, despite also being the largest in their revenues, is also the fastest growing portion of their portfolio. They don't necessarily spend a ton on advertising. Looking through their historical balance sheets on Bloomberg, and despite very little advertising budget and marketing budget, it's still rapidly jumping. We'll get a bit into that a little bit later, but introducing kind of some of their executive team, they have the company is now led by Julie Smolinski, which is the current CEO, and she was the daughter of the founder, Michael, and she's been instrumental in growing Lifeway Foods from $12 million in revenue in 2002, when she took over after Michael's death, to $186 million in 2024, which represents a 13.27 compounded annual growth rate for revenues. And she's very passionate about raising awareness for kefir and its health benefits. I watched quite a few interviews with her, and you could tell that while the business wasn't necessarily primary, like her primary focus isn't necessarily to create the most money possible, which we'll get into in a little bit, it's primary that she loves the brand, she knows what it stands for, and she really wants to create a product that's very beneficial to her customers of that brand, and she cares more about that. And that's something that genuinely kind of excites me to see as from a potential shareholder. Now, we'll get into some of the more fun stuff with this. I've decided to rope family drama in with the Danone acquisition. I think, yeah, Danone. And we'll get into that in a second. But this is a really exciting thing for me, because you don't ever typically see a family feud very public in, like, public company space. So currently Lifeway Food faces pressures from activist investor Danone, which they originally invested in 1999, and they currently own 22% of Lifeway shares. And so Danone's used its position. They keep trying to acquire Lifeway, including a $305.9 million offer in September that the company actually rejected, which at the time I think they were in the right for rejecting. So they've tried to, at one point they tried to acquire the rest of the outstanding shares for $25 a share, and that was rejected. And then they came back with a slightly better offer at $27 per share, and that again was rejected. The reason being that the board and Julie believed that these were kind of lowball offers that kind of got the foot rolling on negotiating, and they're still very open to being acquired, but just those deals they didn't think benefited the shareholders as much for what the shares were currently trading around. Now, the company has also faced a public family dispute, as I mentioned earlier. Julie's brother Edward Smolinski was the COO until 2022 when he was terminated for cause, but he still remains on the board and he's the second largest shareholder. And then in 2024, shortly after being let go, he filed a consent statement with the SEC where he accused Julie of poor corporate governance and called for her removal. And he used some rather harsh language, even going as far as to call her a criminal, and she was out of touch with everything going on. And then he actually opened his own rival kefir company called Pure Culture Organics, which, of course, Julie and the board of directors decided to try and sue them on that for basically trying to rip off the existing company's ideas. And it led to a whole backlash very publicly. Actually, in doing research for this, it was really interesting because what happened was Edward, again, 2022, he gets let go. He and his mother very, very quickly moved to remove Julie as the CEO of the company, and they wanted to do a clear sweep of the board and add their own specific independent directors by getting rid of all of the directors, and they provided a list with people who they wanted to put on the board, which unsurprisingly included both the mother Lumilda and Edward, who both were filing to get Julie pushed directly off the board. And this really boiled down to a change in direction that they wanted for the companies. They said Julie wasn't prioritizing necessarily the trends that she should be prioritizing, and also that she was money hungry and they weren't doing anything, and just like a slew of accusations. And I actually had a really fun time kind of looking into this because even during some of this, I went and tracked down Edward Smolinski's LinkedIn. And it's funny because some of the posts that he was making about this, which again, this is like personal family stuff that has kind of like taken on to encompass the business in a way. He on his LinkedIn, he'd like link articles about this situation, and then he'd kind of talk about it in a way you'd expect like two 13-year-olds beefing over Instagram to do it. Like, remember at school if like two kids hated each other and it was a whole thing, and then you go home and you'd see both of them on their Instagram stories and they just put like monologues of stuff you wouldn't like say to people to their face. Like, Edward had clown emojis, and one of the quotes that really stuck with me is she's calling me the bully, she's really the bully. And mind you, this is a professional LinkedIn. Like, LinkedIn as a platform is constantly getting criticized because people are too like exaggerating with their roles in companies and too professional, and they don't come off as real people. And here you have like a person acting like they're in an Instagram beef as a middle schooler, like saying similar stuff, throwing clown emojis on their posts, things like that just kind of come off as immature. So honestly, like having seen this and digging more into this, I gander as far as to say is Julie is probably in the right. I mean, the independent board, all of the members sided with Julie during this, and they have continued to side with Julie, as Edward, despite opening a I don't know if I can label it a pure ripoff, but despite opening a rival company, has still been trying to replace her on the board, saying that her actions don't benefit shareholders. But I guess the question with family-owned businesses is it that she doesn't benefit shareholders as in like individuals and larger companies like Vanguard that are trying to invest in it, or is she not benefiting you as the second largest shareholder and what you want to see happen for the company? Really, this was just kind of funny to see because family-owned public businesses kind of have a sour spot to me because when I did the CFA research challenge for my school, we did a very, very well-known drink company that was a family-owned business and was like on its third or fourth generation. This was a very old company, and what we saw was the family had completely taken over all of the voting rights pretty much, and they had just turned the company into a way to just make money for themselves. So all they cared about was dividends and their payout ratio. Like they were debt financing, even special dividends, and they were just trying to suck out all of the revenue in terms of how can we get the most money out of this business. And with Lifeway, you don't necessarily see that at all. There's no dividends. With Danone, which I mentioned earlier as actually the largest shareholder of Lifeway Foods, they've actually even gone as far as to block anytime there's stock-based compensation on the table. So there really isn't like an excessive way for any of the family members to try and suck all of the money out of Lifeway Foods and what's happening. So it's kind of like you see this triangle on the top where the four largest shareholders all hate each other, and it kind of keeps everyone in check. I guess kind of like how the US government works in a bit, is none of them are exactly getting what they want with the company, but at the same time it's kind of just benefiting like the shareholders of the company in a way, because while they aren't able to do anything, they're like still seeing significant revenue growth, still prioritizing getting into more and more stores, and overall it's kind of a messy situation. But I do think it kind of ends up benefiting the shareholders of the company, because despite the public appearance being, oh my god, this family's trying to ruin a public traded company, companies are still throwing acquisition offers. They're still growing revenues by quite a bit, and they're still getting very good margins despite their primary raw material, milk, being one of the targets for inflation, basically. So now I guess it's time to get more into the valuation specifically and where I think this will end up, whether that's going to be a watch list or we'll pass it or potentially buy it. And so we'll kind of go over that really quickly. So for the investment specifics, it trades around $23 a share. Currently, the PE ratio is 40, which is a bit on the higher end. That's something you'd like expect to see more in a tech thing than necessarily like a food company. It has a price to sales ratio of 1.91. A price to book ratio of 5.19. It does have rather strong margins, and it has a great return on invested capital, and really the spread between the WACC and the return on invested capital is pretty good. And then also there are huge growth expectations kind of built into the valuation, so it is high, but I think a lot of that comes down to how many acquisition like offers they've been getting in the recent years, kind of the growth expectations, and a little bit more on like the most current recent earnings, and especially the past 2 years we've seen really a ramp up in revenues, in growth and everything. So I also threw in kind of some of the most recent and most important parts of this earnings report which just came out. So really quickly, I'll go through that too. So they reported sales of $186.8 million for the year of 2024, and this actually represents a 16.7% increase year over year in sales. Again, despite inflation worries for margins with the raw materials, primarily milk, they maintained net margins of 26%. And then Lifeway Farmer cheeses were actually added into 1,400 Albertsons locations, and the ProBugs organic kefir was added to 250 Harris Teeter stores. And then also in the Q&A portion, Julie Smolinski highlighted several innovations, including the launch of lactose-free organic whole milk kefir flavor fusions and probiotic smoothies with collagen. So this was kind of a big news because they've had 99% dairy-free products, but they hadn't fully had fully dairy-free products, and now they are starting to have that. I also saw recently they announced kind of a focus on looking into potential salad dressing, so that could be quite interesting. And then, again, these products and basically target consumers with rising demand for lactose-free and also gut health-focused offerings, so very healthy food trends, which I kind of like to see going forward. And then Julie Smolinski also stated that Lifeway Foods is focusing on interactive retail efforts, more e-commerce strategies, and partnerships with social media influencers to drive brand exposure and consumer trial. And then the company also participates in events such as Expo West and South by Southwest to showcase its products and innovations. Now, given everything I've said, this is a kind of tricky company and important stock to place somewhere in the recommendations because there are a lot of things I really like about the company. And then also we had the outspoken family drama, and we have activist investors getting involved. But the way I kind of see this is I kind of looked at a Warren Buffett quote a bit that I think kind of inspired my decision making to this, which Warren Buffett's always been quoted on saying that you want to invest in a company that even an idiot can run well. And so if we take everything that Edward and Lumilda have been saying for 2 years, which I struggle to believe is accurate kind of after what I've seen and doing my own digging. But let's just say, for argument's sake, that Julie, as the CEO, is absolutely incompetent, and the directors don't know what's going on with the business, and they don't know the trends of the market and everything. That would mean that a completely incompetent CEO and a board of directors has achieved revenue growths in the past 20 years of 13.47% and ramped up revenue growths to 16% with very little marketing budget, with almost no debt whatsoever, and have even increased their margins from where they've been, and overall created a company that many people and many investors are trying to actively buy up, and also are an acquisition target, repeated acquisition target for one of their longest shareholders. So given all of that, I tend to think that this is a company that I think the Microcap Mania portfolio could really benefit from. I am a little worried on the valuation and what the company is trading for right now at around the $23 a share mark, not for the price specifically, but for the metrics I like to look at. I do think that a lot of that comes down to that they're having a more hard time deriving profits from those revenues, and I think they can actually grow those sales and grow the profits into the valuation. I wouldn't necessarily say that all the time, and if this were just outrageous ratios, no way to see them scaling profitability to grow into that. That would be a major deterrent, but I do think that this is a company that in the next few years will probably get acquired, would be my best guess. I think Julie's around 55 years old. If this company goes to Edward, I'm a bit worried in the direction of Lifeway Foods, so I don't think that's going to happen. I think we'll see an acquisition before that happens, and I really do think that this company is going to get acquired. It's going to massively shoot up the share price of it. So overall, I want to say that we'll add this position to the portfolio, but I'm going to put it on the watch list and try and not necessarily time it per se, but over the next few weeks, if the market continues to go down, we'll try and buy in at a better valuation than what is currently being offered right now. But I think this is a business model I really like. It's in a product category that they don't necessarily have a ton of competition because it is a dairy product and it is similar to yogurt. There aren't that many companies doing specifically kefir, and I don't know if this belongs in the dairy category versus competing with the healthy foods category. And out of what I've tried in the healthy foods category, you have like the apple cider gummies, especially like gut targeted stuff, kombucha, which is terrible. I've never tried a single good kombucha in my life. I feel like everybody just agrees to lying that kombucha tastes good so that people will continue to consume it because it gives you really good benefits, but it's terrible. And overall their products taste good. I feel like it's slightly overvalued, the valuation that the shares are trading right now, but I definitely don't think it's incredibly far-fetched with definitely how the valuation could go on an acquisition if it's taken private, or if a really competent team ends up taking over this company and acquires it and adds it to their portfolio of offerings. I think they could see a significantly bigger push for their products. And so I'm going to be, again, putting it on the watch list, but I do think that Lifeway Foods will have a position in the Microcap Mania portfolio. Again, if you've liked what I've said, if you've liked this little breakdown and you've made it this far in the video, please feel free to like and subscribe. I don't want to beg things. I hate when YouTubers do that, but especially with my channel being so small as it is, it'd be really beneficial to the company, or not it'd be really beneficial to the channel's growth, and also help boost my confidence in making these types of videos and trying to improve my craft in individual stock selection and YouTube as a whole. So thank you for tuning in to this week's episode of Microcap Mania. I'm going to try and look for more potential targets. So I'm going to hit up some more screeners and some stock filters and really try and find more exciting companies I can cover. I think this one was, I spent a lot of time on the family drama just because you don't ever see that really in these highly traded public companies, and a 300 plus million market cap isn't necessarily small, so it's really uncommon to just see that type of Kardashian level family drama in a public traded company. So I thought that was a really fun surprise when I was also going through the valuation, because how this popped up was I was trying to find more of a growth company approach, and then I ended up finding Lifeway, and I was familiar with their products, and then I stumbled onto a year's worth of drama story that I felt needed to be covered, as it's an important part of the valuation and everything, because you want to feel confident with a management team, and if there's too much drama and you don't think they have time to necessarily focus on the company, then why bother? So again, thank you for tuning in this episode. I'll try and get some more videos out here in the coming weeks. I'm going into exams, so hopefully we can get a couple more videos out. But again, thank you so much for your time, and thank you for checking out my channel.